What's up, crypto crew? Bitcoin Bulletin is live with the news that's shaking the digital asset world. First up, we've got Michael Saylor, the visionary behind MicroStrategy, calling Bitcoin digital energy and explaining how it's poised to completely revolutionize global finance and credit markets. He's got big plans, and you won't want to miss the details. Next, get ready for innovation as Re7 Capital is set to launch a brand new Bitcoin yield fund, and they're bringing it to the Starknet ecosystem. This move could unlock new avenues for investors looking to generate returns, and we're breaking down exactly what this means for the DeFi space. Hold on tight, because JPMorgan just dropped a bombshell report revealing that Bitcoin miners' market cap hit an all-time record in September. We're talking billions of dollars in value, driven by major announcements and a surge in network hash rate. Find out which mining stocks are soaring. And finally, we're seeing Dogecoin zoom ahead by 6% on the back of Bitcoin's incredible strength. Is this a sign of things to come for the meme coin? We've got the analysis you need to understand the momentum. Stick around for all the details and make sure you're subscribed so you don't miss out on any of these explosive updates. Michael Saylor declares Bitcoin digital energy, poised to reshape global finance. This isn't just another Bitcoin update. It's a fundamental reimagining of our financial future, with Michael Saylor, the driving force behind MicroStrategy, leading the charge. He's painting a vivid picture of Bitcoin not just as a digital currency, but as digital energy, a force as revolutionary as fire or electricity, capable of transferring value across any distance and any time. Saylor's vision places Bitcoin treasury companies at the very heart of 21st-century credit markets. He elaborated in an exclusive interview that thousands of these Bitcoin treasury companies can thrive, not by engaging in cutthroat competition, but by modernizing the often clunky and outdated credit markets we've relied on for decades. These companies will offer streamlined, more efficient alternatives to traditional financial instruments. Saylor projects that as many as 5,000 such companies could operate in the U.S. alone before market saturation becomes a significant factor, assuming the global trend towards Bitcoin-backed credit continues its upward trajectory. He meticulously categorizes these burgeoning entities into 3 distinct tiers, each playing a crucial role in this financial metamorphosis. The strategic implications are immense, particularly in regions like Switzerland and Japan, where low interest rates and financial repression create fertile ground for Bitcoin-backed credit to offer superior yields compared to conventional investments. Saylor's ultimate ambition for MicroStrategy is colossal: to amass a staggering $1 trillion in Bitcoin holdings while simultaneously issuing $100 billion in credit annually. This dual-pronged approach aims to fundamentally reshape global credit markets by dramatically enhancing liquidity, boosting yields, and reinforcing overall market integrity. Despite the ongoing regulatory complexities, Saylor remains confident that increasing adoption and the natural evolution of oversight will lead to de facto recognition of these tokenized digital securities. Ultimately, he envisions these Bitcoin treasury companies as the essential infrastructure that will not only foster thousands of profitable enterprises, but also fundamentally transform the very fabric of global credit markets. But will these ambitious plans navigate the regulatory minefield? And what's next for Bitcoin's integration into the financial system? Stay tuned as we explore the cutting edge of crypto finance and get ready for a look at how yield generation is evolving on the Starknet layer. Re7 Capital unveils Bitcoin Yield Fund on Starknet, opening doors for broader investor access. In a significant move for the decentralized finance space, Re Capital is preparing to launch its highly anticipated Bitcoin Yield Fund, marking its entry into one of crypto's most dynamic sectors. This innovative fund is slated to become accessible to investors starting this month, specifically on the Starknet platform. Starknet, a prominent Layer 2 scaling solution for Ethereum, utilizes sophisticated mathematical and cryptographic techniques to validate off-chain transactions, aiming to overcome the inherent scalability challenges faced by both Ethereum and, by extension, Bitcoin. Re Capital, a firm deeply embedded in the DeFi ecosystem, specializes in sophisticated yield generation, liquid strategies, and robust on-chain vault management, currently overseeing assets valued at over $1 billion. The upcoming Bitcoin Yield Fund will be tokenized, a crucial detail that signals its accessibility beyond just institutional players. Re7 Capital has already secured substantial commitments, announcing via X that approximately 2,000 BTC have been pledged by a group of eager allocators, underscoring the strong demand for such a product. While the firm has yet to release specific yield projections, the enthusiasm is palpable. Eli Ben-Sasson, co-founder and CEO of Starkware and a board member of the Starknet Foundation, hailed the collaboration as a powerful validation of Starknet's core mission. He emphasized that this development not only bolsters Starknet's security, but also significantly enhances its utility for a wide array of users, including institutions, retail investors, and DeFi enthusiasts, reinforcing Starknet's role in connecting different facets of the blockchain landscape. The fund will be offered in two distinct formats: an institutional-grade product tailored for professional investors and a tokenized version facilitated by Midas. This latter option is designed to democratize access, allowing for more widespread participation in the burgeoning world of Bitcoin native yield generation. Re7's core strategy centers on a dual focus: accumulating Bitcoin while rigorously protecting capital. Employing a market-neutral approach, the fund aims to generate consistent, sustainable yield through the strategic use of derivatives, trading for premium capture and positive carry, complemented by exploring passive yield opportunities within the existing BTC DeFi ecosystem. This fusion of Bitcoin's potential with Layer 2 innovation is creating exciting new opportunities. But what happens when the big players in traditional finance start looking at mining operations? We're about to dive into JPMorgan's latest report on Bitcoin miners' record-breaking market cap. JPMorgan reports record-breaking market cap for U.S. Bitcoin miners in September. The burgeoning Bitcoin mining sector has reached a significant financial milestone, with the collective market capitalization of 14 U.S.-listed Bitcoin miners, as tracked by JPMorgan, surpassing the $50 billion mark for the first time last month. This surge underscores the growing influence and valuation of mining operations within the broader cryptocurrency landscape. According to a recent report from the Wall Street Bank, the combined market cap of these tracked mining stocks experienced a remarkable 43% month-on-month increase, climbing to an impressive $56 billion in September. This substantial growth was fueled by a series of strategic announcements and operational expansions within the sector. Notable drivers included Cipher Mining's significant HPC colocation deal with FluidStack and IREN's aggressive expansion of its cloud services business, signaling a proactive approach to growth and diversification among mining firms. Concurrently, the Bitcoin network's overall hash rate, a key indicator of mining power, also saw a notable increase. Analysts Reginald Smith and Charles Pierce highlighted that the monthly average network hash rate climbed by approximately 82 AS, a 9% rise from the previous month, settling at an average of 1,031 AS in September. The hash rate represents the total computational power dedicated to mining and processing transactions on the proof-of-work blockchain. However, this increased mining power came with a dip in profitability. For the second consecutive month, mining profitability saw a decline as the hash rate consistently exceeded the 1,000 AS threshold. JPMorgan analysts estimated that miners earned an average of $49,700 per AS in daily block reward revenue during September, a 10% decrease compared to August. Furthermore, daily block reward gross profit also slumped by 17% from the preceding month, indicating a more competitive mining environment. Within the group, Bitfarms stood out as the top performer, achieving an extraordinary 110% gain, while Kango lagged behind with an 11% decline. The report also revealed that a significant majority, 12 out of the 14 miners covered by JPMorgan, outperformed Bitcoin itself in terms of stock performance during September, showcasing the sector's independent momentum. This incredible surge in miner valuations is a clear sign of industry confidence. But as Bitcoin's strength grows, so does the influence of other cryptocurrencies. Get ready, because we're about to see how Dogecoin is capitalizing on this bullish momentum. Dogecoin surges 6% as Bitcoin's strength bolsters meme coins' performance. Dogecoin is demonstrating resilience, holding firm above critical support levels as institutional capital injects much-needed liquidity into the market. Buyers have consistently defended the $229 230 price floor, while significant selling pressure has capped upward movements around 0.234. A notable late-session surge indicated building momentum, though sustained gains remain contingent on Dogecoin's ability to maintain closes above key resistance points. Between September 30th and October 1st, Doge saw a 1.6% increase, recovering from a low of 0.227 to close at 0.234. Institutional trading desks were reportedly the dominant force, actively defending the sub-$230 zone during Asian and European trading hours. Resistance emerged at 0.234, where trading volumes surged past the 24-hour average of 248.7 million tokens. Market analysts observed that this trading session highlighted an increasing institutional presence in a market that was once primarily driven by retail investors. The token traded within a tightly compressed range of 0.007, indicating a volatility of approximately 3%. During the afternoon trading session, turnover spiked significantly, exceeding 400 million tokens, nearly double the average daily volume. In the final hour of trading, Doge experienced a notable upward push, rising from 0.233 to 0.234, accompanied by a surge of 15.3 million tokens during a breakout attempt at 7:32 a.m. The critical support at $229 230 has been repeatedly validated, with multiple defenses holding strong against prevailing sell pressure. Conversely, resistance has solidified at 0.234, acting as a ceiling for rallies. This narrow trading corridor suggests a controlled price discovery process, largely influenced by institutional desks rather than the unpredictable volatility often associated with retail trading. While the recent breakout indicates positive momentum, sustained strength above the 0.234 resistance level is crucial to confirm a continued upward trend towards the 0.24 target. It's clear that institutional interest is shaping the market across the board. But what does all this mean for the average viewer? We've covered a lot of ground today, from high-level finance to specific altcoin movements. Get ready for a quick recap and our full call to action. And that's a wrap on another explosive Bitcoin bulletin. We saw Michael Saylor envision Bitcoin as digital energy, set to transform finance. Re7 Capital launching a new Bitcoin yield fund on Starknet. JPMorgan reporting record market caps for Bitcoin miners, and Dogecoin surging on Bitcoin's strength. Don't forget to smash that like button, subscribe to the channel for all your crypto needs, hit the notification bell so you never miss an update, and drop a comment below telling us what you think about today's news. Follow us on all social platforms for more real-time updates. See you next time.